I hope this helped. Keep watching to check out my tips for passing your life insurance exam. And also stay tuned for my channel on once you get your license, how you can master the life insurance sales process. So there's 4 elements to a legal contract as it pertains to a life insurance policy. We have number 1, the agreement, which is the offer and the acceptance. Number 2, we have a consideration. Consideration is the value being offered by both parties. Number 3, we have competent parties. And then number 4, we have legal purpose. So there's a legal reason why someone's getting insurance and why the insurance company is giving the insurance. The agreement, the offer, and the acceptance. So the offer is actually being made by the primary insured. So the offer is being made by the person whose life is being insured. It's an offer to the insurance company saying, here's my health information. I'm willing to pay every month. Are you willing to accept my offer and give me insurance? This can be confusing because we see on TV sometimes like, oh, insurance coverage offered to you by this company, right? But in the legal aspect of it, the way it works is the person getting insurance, or the person whose life is being insured, is the one presenting the offer to the insurance company in the application, saying, I'm offering to be a client of yours, right? And then the insurance company decides to accept that offer or not. Okay? Next is competent parties. So everybody involved has to be of legal age. They have to be able to make decisions on their own, so they have to be like mentally competent to be able to make those decisions. And they also have to not be on drugs. So if someone's under the influence of like narcotics or like some sort of alcohol or something like that, if someone's on drugs, then the contract can be voided. All right, so that's what that's what competent parties mean. And then the last one is legal purpose. So legal purpose means that there has to be insurable interest. This means that there's got to be a real reason why the person is applying for insurance, or why that person is getting insurance on their life. So what I mean by this is there has to be a loss suffered by someone or something. You can't just go get insurance on like your rich uncle. Well, maybe you could because it's your uncle. But you can't just go get insurance on your rich neighbor. Maybe that was a bad explanation. Say your neighbor's like super loaded. You can't just go get insurance on your neighbor if you don't sustain any loss when that person dies, right? A husband or a wife can get insurance, life insurance for themselves and leave it to their family, because if they die, they have to continue the income and they have other debts and obligations to their family. So there's a loss that takes place. So there's insurable interest. Like car insurance is an easier example. Like if you don't have a car, why would you get car insurance? You can't drive. If you can't drive, you can't get car. Why would you get car insurance? There's no insurable interest. There's no reason to get it. So life insurance is the same thing. The reason why this is in place is so people can't just profit off of the death of others. That's kind of it's kind of messed up. Also, there's a consideration. So the second part of this contract is the consideration. Now the consideration is the value being offered by both sides. So the value being offered on part of the insurance carrier and the value being offered on part of the insured, the person whose life is being insured. The value being offered on part of the person whose life is being insured is the monthly premium and the information in the application, right? So monthly premium is how much they're paying every month for the insurance, or annual premium, or whatever. The premium is how much they're paying. That's what their consideration is, okay? The consideration on part of the company is, hey, we're going to pay this claim if you die, okay? So those are the 4 elements there. We have agreement, which is the offer on part of the insured, and the acceptance on part of the insurance carrier. We have the consideration, which is the value being offered by both parties in the contract. So the value being offered by the insurance carrier is, hey, we are going to pay the claim if you die. The value being offered by the insured is the information in the application and the monthly premium, or the premium, I keep saying monthly, but just because most people pay them monthly. And then the competent parties, it means everyone involved has to be of legal age, not on drugs, and mentally able to make a decision for themselves, pretty much, like you competent. And then the last is legal purpose. There has to be a reason, a legal purpose for someone to get insurance. There has to be a loss suffered when the insured dies in order for them to get life insurance, and in order for someone to get life insurance on them. And they have to give consent as well. So consent has to be given. Like, you can't just go get life insurance on someone without them knowing, without anybody like knowing and being involved in that. I hope this helped. Check out my tips for passing your life insurance exam. Keep watching to check out my tips for passing your life insurance exam. And also stay tuned for my channel on, once you get your license, how you can master the life insurance sales process.